It's time for the fair tax, a presentation in two parts. Part 1 contains the fair tax economic highlights. Part 2 is an appendix with fair tax detail. And note, this entire presentation is available on YouTube at Fair Tax Economics 2016, capital D-O.
As a concerned American, would you like to strengthen our exports, reduce our imports, bring back manufacturing jobs, shrink our deficit, solve our jobs problem, provide a better funding source for Social Security and Medicare, and increase our gross domestic product by 10.6%? If your answer is yes, you will love the fair tax. The fair tax is a consumption tax which is collected at the point of sale. It replaces all income and payroll taxes. Corporate income taxes drop to zero, the IRS is disbanded, and the 16th Amendment, which gives the Congress the right to tax income, is repealed under separate legislation. Now, what is that fellow in the blue suit smiling about? He is smiling because under the fair tax, he gets to keep his income and payroll taxes, and he no longer has to file an income tax return. His brethren in the corporate world are also smiling because they no longer have to file corporate income taxes. And with zero corporate taxes, their business volumes will go through the roof. When you eliminate all corporate income taxes and payroll taxes, the price of new products and services is reduced by an average of 22%. We refer to these taxes as embedded taxes. When you remove the embedded tax from the price of a new $20,000 car, the base price drops to $15,600. If the car is sold domestically, the fair tax is included and the price becomes approximately $20,300. However, if this car is exported, it leaves the loading dock at a price of $15,600. Now let's think about this. Let's say you are considering the purchase of a new $20,000 Toyota car. Ford makes an equivalent $20,000 car, and you are considering both cars. Ford drops its price to $15,600. Is there any question as to which car you would buy? Of course not. You would buy the Ford car. A 22% price cut makes a huge difference in purchasing patterns, not just in cars, for all exported products and services. Now, what happens to export sales when you drop the price of all exports by 22%? The sales of exports go through the roof.
The impact on imported products is equally dramatic. Consider an imported car which sells for $20,000 and normally competes with a domestic car selling for $20,000. When the fair tax is included in the $20,000 price of the imported car, its U.S. price becomes $25,974. And the fair tax is going to add this level of price increase to all new imported products and services. Let's say you're again considering the purchase of a $20,000 Ford car or a $20,000 imported Toyota car. Toyota's price with the fair tax included becomes $25,974. Is there any question which car you would buy? Of course not. You would buy the Ford car. The inclusion of the fair tax makes a huge difference in purchasing patterns for imports, not just for cars, but for all new products and services. So what happens to the sales of domestic products that compete with imports when the fair tax is included in the price of all new imports? Domestic sales go through the roof.
With domestic products and exports more price competitive and generating a lot more economic activity, manufacturing jobs will return. These are the jobs that pay more, and we will stop cold the drift of manufacturing jobs overseas. With corporate taxes at zero, the United States overnight will become the corporate tax haven of the world. For a corporation, it doesn't get any better than zero corporate taxes. Corporations from all around the world will want a presence here, be it a manufacturing plant, an office building, and in some cases their corporate headquarters. This explosion in economic activity will result in a gross domestic product increase of 10.6% in year one of the fair tax. At that level of gross domestic product, jobs hiring will move into overdrive. And there is more. Today, it costs corporations and individuals $430 billion just to prepare their tax returns. This economic waste is mind-boggling and unnecessary. Under the fair tax, all of these funds can be spent on product development, productivity enhancements, or returned to the stockholders as dividends. This is a huge national benefit and an enormous jobs generator. The tax avoidance amount of $450 billion is increasing at an alarming rate. These are funds that are owed to the IRS but never collected. Under the fair tax, that number will drop like a rock because 3.6% of all retailers will collect 85.7% of the retail taxes, and 1% of all the service companies will collect 80% of the service taxes. These large firms have too much to lose to risk cheating. Fair tax implementation will cut tax avoidance by billions of dollars. Illegal aliens, who today pay no income taxes, will pay 23% of all their new product and service purchases to our Treasury. This is a brand new revenue source. We get 50 to 60 million tourists visiting this country every year. Through their purchases, they will add approximately $50 billion to our Treasury. Another new revenue source. For many years, we have been running a negative balance of payments of $40 to $60 billion per month, causing us to owe China over $1 trillion and rising. This kind of debt puts our nation at serious risk. With increased exports and decreased imports, the balance of payments deficit will shrink substantially. Corporate profits held overseas to avoid taxation will return rather quickly because they will not be taxed in the U.S. These monies will contribute to increased economic activity here in the good old U.S. of A. And finally, a GDP which is increased by 10.6% will generate increased tax revenues, and this will cause our deficit to fall. All of these economic benefits can be achieved by simply changing the way in which we collect our taxes, and therefore, the genius of the fair tax will give us an economic lift that our citizens desperately need. There are many groups that benefit from the current tax system, and they will resist any change, regardless of how good the fair tax is for America. However, the major opposition will come from the lobbyists. Today, there are approximately 22,000 registered lobbyists in Washington, D.C., and 2/3 of them lobby the tax code. Approximately 15,000 lobbyists are working full-time to get tax benefits for their constituents. If this doesn't alarm you, nothing will. How successful have they been? To date, they have increased the size of the tax code to 75,000 pages, and they are increasing these pages on a daily basis. By any measure, they have been very successful. And every time they achieve a success, who winds up making up the deficit? You and me, we the people, because we have no lobbyists. This is a tremendous breach of trust against the American people. Now, how much opposition do we expect from the lobbyists? It will be massive, because if the fair tax is passed,
the need for 15,000 lobbyists evaporates. Wouldn't the fair tax be a breath of fresh air in Washington, D.C.?
Now, what does the current tax code do for us? With the highest corporate tax rate in the free world at 39%, many of our products and services have become non-competitive and have moved to lower tax rate countries. On average, it adds 22% to the price of new products and services, diminishing our ability to compete in foreign markets and making our domestic products more vulnerable to foreign competition. We will continue to run a negative balance of $40 to $60 billion per month, and our $1 trillion deficit with China will continue to rise. Manufacturing jobs will continue to leave this country. Our deficit will continue to climb unabated. 93 million Americans will be unable to find a full-time job, and hiring will continue in underdrive. Our GDP will continue to limp along at 1 to 2%. The current tax code is anti-business, anti-worker, anti-minority, and works against all of our citizens. It is an unequivocal disaster.
And it gets worse. The Medical Hospital Insurance Trust Fund will be depleted in 2026, 10 years from now. The root of the problem is easy to see. Retirees are retiring at a faster rate than new workers are entering the workforce, and the problem gets worse over time. As a future source of revenue, the ability of the workforce to pay for the system is fatally flawed. The funds are just not there. The current solution requires either increasing the amount that workers pay into the system or decreasing the benefits to the retirees. As these solutions are politically unpopular, nothing is being done, and each year the solutions become more expensive. I wouldn't be surprised to find that the solutions are already so unpalatable that it is politically safer to just let them slide. And so, this train wreck gets closer and closer. And when it eventually hits, the explosion will be heard round the world, and it could just take down with it the best medical system in the world. Therefore, we have a tax code which is a disaster, and part of that code is an oncoming train wreck. Now, I should also point out that the fair tax is a much better funding source for Social Security and Medicare, because the payments are based upon personal consumption expenditures, which increase yearly, rather than on the workforce, which is shrinking as a percentage of the relevant population. From time to time, people ask me if the fair tax has been implemented in another country, and when I tell them no, they immediately suggest that this makes it way too risky. My answer to this is addressed by the country of Ireland. When I visited Ireland in 1959, the country was an economic basket case. Fast forward 25 years, when several bold legislators proposed a corporate tax cut from 52% to 12%, a 40% drop. Many said that it was too risky, but the legislators held their ground and got it passed. What was the outcome? The country experienced an economic boom, and within just a few years, the unemployment rate was reduced by 40%. Note that the fair tax drops our corporate rate by about the same amount, from 39% to 0. In recent times, Ireland's economy has suffered from the banking crises that have plagued both Europe and the US. However, if Ireland can experience an economic boom from a 40% drop in corporate taxes, why not let the fair tax do the same for the good old US of A? Our biggest risk is not going to the fair tax. It is staying with the current system, which is both a disaster and an oncoming train wreck.
We have just one recommendation.
and it is directed to the Speaker of the House. Place the fair tax bill before the House Ways and Means Committee and have it scored. When the fair tax was first proposed in the year 2000, it was revenue neutral in that the fair tax would collect the same amount of revenue as the current system. Events of the past 15 years suggest to me that the fair tax would collect a lot more revenue than the current system. And the sooner that amount is determined, the better off we are. Mr. Speaker, if you want to put the great American economic engine into overdrive, you can do it with a fair tax. And 93 million American workers will be eternally in your debt because many of them will be able to get a full-time job paying good wages. The appendix contains fair tax detail, a consideration of the alternative forms of tax reform and the reasons they are not good choices, the detailed components of the fair tax, specifically what is replaced by the fair tax, a close look at the embedded tax, an examination of the prebate and how it makes the fair tax progressive, the way in which the fair tax uniquely taxes the very wealthy, the current status of the fair tax, and finally, references to the fair tax support material.
One of the most popular forms of tax reform is the flat tax. In its simplest format, it reduces both the individual and corporate tax rate to a level much lower than the current rates. It contains a number of problems. It is difficult to implement without reducing tax revenues, and with our current deficit levels, it will make a bad situation worse. If a flat tax managed to get passed by Congress, it has no durability. A future Congress can change the rates in any direction, and the 15,000 lobbyists would be hard at work generating constituent tax breaks as soon as the ink was dry. We attempted to flatten the tax in the mid-'80s, and it did not last. All of the current proposals are based upon the current tax system, the one that is a disaster attached to an oncoming train wreck. The proposals lack fundamental research and are more back-of-the-envelope proposals than they are thoroughly considered plans, and they are all politically driven. All other tax proposals that are currently on the deck suffer from these same problems. They are difficult to implement without reducing revenues. They have no durability. They are extensions of the current system. They lack fundamental research, and they are all politically driven. My conclusion is that all of these proposals are non-starters, and we are left with just two choices: the fair tax or the current system.
The fair tax is just the opposite of these tax reform proposals. It was developed by several successful businessmen from Houston who spent $6 million of their own money because they felt that the current tax system was not serving the nation. They asked this question: what is the federal tax system which would best serve America? And the answer that came back was the fair tax. It is backed by substantial research, and the total spending on the fair tax has now reached $22 million. Completed bills exist in Congress, just waiting for a hearing. Now, the Houston businessmen were never going to benefit from the fair tax. They were not seeking political donations, they were not running for office, and they were too old to ever benefit personally from the fair tax. They did it very simply because they knew it would be good for America. Future generations cannot be assured of prosperity and freedom unless the current tax code is abolished the IRS is disbanded, both of which occur under the fair tax, and the 16th Amendment is repealed through companion legislation. Now, what is the fair tax? It is a national consumption tax, an inclusive sales tax collected at the federal level. The tax is collected on all new goods and services. Used goods are not taxed. It is collected at the point of sale, so that if you bought a $100 appliance at Walmart, the sales slip would show the fair tax at $23, that is 23%, and the product price at $77. That makes the fair tax transparent to the purchaser. Every time he buys a new product, he will see the total amount of tax that flows to the federal government. This characteristic, all by itself, will be a healthy and sobering experience for the taxpayer. It is revenue neutral in that taxes collected under the fair tax in year one will be approximately the same as if collected under the current system. Prices in relationship to income will remain approximately the same. They will not increase by 23% as some would have you believe. Some segments will be a bit higher and some segments will be a bit lower, and all prices will be a bit higher initially until market forces drive them down. The price relationships between new products and used products will remain approximately the same. Now, why is that fellow in the blue suit smiling? He is smiling because April 15th will now just be a pleasant spring day. He doesn't have to assemble a mass of tax data, he doesn't have to file an income tax, and he never has to worry about the IRS again. His brethren in the corporate world are also smiling because they too will never have to file a corporate income tax.
What is replaced? All taxes on income, including withholding, capital gains, dividends, interest, the AMT, etc. All payroll taxes on Social Security and Medicare. Now, what is that fellow in the blue suit smiling about? When all those taxes are removed, he gets to keep those taxes. If you could keep your taxes, you'd be smiling too. There are no self-employment taxes. Corporate income taxes drop to zero, and that has an enormous positive impact on our economy. No gift tax. You can give what you want to give, when you want to give it, unencumbered by gift tax penalties. No taxes on estates. When the owners of a family farm pass on, the farm can pass to their next generation without estate tax concerns. The IRS, as we know it, will be disbanded because there is no need for its services. Perhaps 10% of the personnel will be retained to administer the fair tax. And the 16th Amendment, the amendment that gives Congress the power to tax income, will be repealed by separate legislation.
If you purchase a $20,000 car in a state that has a 6% sales tax, what are the total taxes you pay on that car? And this is a bit of a trick question, I have to admit. Is it $1,200, which is 6% times 20,000? Is it more? Is it much more? And of course the answer is much more. And that leads us into a discussion
of the embedded tax within the current system. Now, to explain the embedded tax, we are going to use a simplified manufacturing process for a car. We start with a mining operation where the ore is removed from the ground, then on to the foundry where ingots are produced, from there to the parts manufacturers, and then to those who make sub-assemblies.
then on to final assembly, and then to the dealer where the car is placed on the sales floor. Now, at each step of the process, we have corporate sales taxes and corporate payroll taxes. If we remove all of those taxes, we find that we have added 22% on average to the price of each car. Now, the percentage actually varies by business segment, and it varies from 15% to 27%. However, the average is 22%, and that is the percentage we are going to use to explain the nature and the impact of the embedded tax. So, we will start with a new car priced at $20,000. Applying the embedded tax of 22%, the tax is actually $4,400. And the actual price of the car is $15,600. Note that the size of the embedded tax is substantial, and it exists for all new products and services, and it is hidden. Most of us are not even aware that this tax exists, and we would guess that the state sales tax is the only tax being paid at the point of purchase.
The fair tax prebate is a very important element of the fair tax. It is paid monthly to all resident citizens with a valid Social Security card. I repeat, to get the prebate, you've got to have a valid Social Security card. You got to be a U.S. citizen, and you got to be living in this country. Under the prebate, no one, regardless of income, pays taxes on the necessities of life. And the prebate is based upon the poverty level and is determined annually by the federal government. Here is how it works. The poverty level for a family of 4 is about $32,000. This is the amount of money that a family of 4 needs to spend to acquire the basic necessities of life and nothing extra. The prebate is equal to the amount of fair taxes you would pay when you spent the $32,000. Now, the prebate for all families of 4 is the same regardless of income. You get the prebate if you have 0 income, $25,000 in income, $100,000 in income, or if your income is greater than $100,000. If you have a family of 3, your prebate is less, and if you have a family of 5, your prebate is more. Now, the most important element of the prebate is that it makes the fair tax progressive. Under the current tax code, a family of 4 that earns $32,000 may pay income taxes. They will pay payroll taxes, and this is a regressive tax because everyone pays the same rate regardless of income. But under the fair tax, that family of 4 no longer pays income tax, no longer pays a payroll tax, and gets a prebate which covers all of the fair taxes paid during the expenditure of his $32,000. In effect, his tax rate is 0. Now, as your rate of spending increases, your effective tax rate increases until you reach a spending level of 7 figures where your effective tax rate approaches 23%. You control the amount of taxes you pay. If you save, your effective tax rate is less. If you buy used, your effective tax rate is less. The fair tax uniquely taxes the very rich. Those are the folks who usually can define the way in which they are compensated. They typically are not paid in wages. Rather, they get paid in stock options, stock, capital gains, dividends, etc., and their tax rate is much lower than if they were drawing the same amount in salary. Under today's tax code, they are bulletproof. You can raise the income tax rate through the roof, and they are unaffected because they are not paid in wages. They also do not pay a payroll tax. Several years ago, Warren Buffett announced that his federal tax rate was lower than his secretary's, and that didn't seem fair. Most would agree. However, the very rich will be taxed under the fair tax because every time they buy a new car, a new house, a new boat, a new plane, etc., they will be paying federal taxes at 23%. Note that the fair taxes on a new $10 million plane come to $2.3 million. A pretty good day for the feds. Another category that currently pays zero taxes is Mr. Silver Spoon. His daddy provided him with a trust fund of municipal bonds upon birth. He will sail through life paying zero federal taxes and zero payroll taxes. He too is bulletproof because you can raise the income tax rate and he could care less. Under the fair tax, he kicks into the federal treasury at 23% whenever he buys a new car, a new house, a new plane, or a new boat. Now, what do we call someone who is for the current tax system? Is he pro-U.S. citizen? Well, combine the coming train wreck in Medicare with the many tax breaks for the special interests, which we have to pay for, and we have to conclude, absolutely not. Is he pro-business? With the highest corporate tax rate in the free world, absolutely not. Is he pro-worker? With our corporate tax rates driving whole industries, companies, and products overseas, and the jobs that go with them, absolutely not. And finally, is he pro-minority? Unfortunately, the minority worker is typically located at the low end of the worker economic spectrum, and those jobs are the first to go when jobs go overseas. Therefore, pro-minority, absolutely not. Well, if the current tax system supporter is not pro-citizen, pro-business, pro-worker, or pro-minority, what is he? I don't have a name for him, but it seems to me that he is probably more interested in his re-election than in solving the many problems of this great nation of ours.
What is the status of the fair tax? There are currently 2 complete fair tax bills, one in the House and one in the Senate. They are each 133 pages in length, not 75,000 pages. These bills are readable and implementable. We have 81 co-sponsors and sponsors. Conversion. For the 45 states that currently collect sales taxes, conversion will require them to add several lines to their sales receipt. For the remaining states, where their electronic registers permit it, several lines will be added to their sales receipts. For the remaining registers, replacements will be required. But all in all, conversion is quite doable. And there are reimbursements. Businesses will keep 0.25% of revenues when they transmit these revenues to their states, and the states will keep 0.25% of their revenues when they transmit these funds to the federal government.
If you have any questions about the fair tax, your first stopping point should be our national website. It contains a great deal of information. If you still have questions, I refer you to 2 bestsellers, The Fair Tax Book and Fair Tax: The Truth. Both books are available at Amazon and are available in a Kindle edition. These books were written by Neal Boortz, the talk show host, and Congressman John Linder. We owe these men a great debt of thanks because these carefully researched books contain everything that you could possibly want to know about the fair tax.